Let me ask you, if I sat with you today and asked you, how is your business doing financially? What would you say? You might tell me business is good, or we are making more sales, or maybe things are a little bit difficult. But here is the question. How do you actually know about all these numbers? Because as a business owner, you cannot manage what you do not understand. And one of the biggest mistakes I see entrepreneurs make is looking at only one number. And you guessed it right, that's sales. So we made 500,000 this month, we made 1 million this month, we made 50,000 this month. That's the only figure I've seen most entrepreneurs focus on. But how much of that 500,000 did you actually keep? How much did it cost you to generate those sales? How much did you spend running the business? So those are the operating costs. How much cash do you actually have? And how much money are your customers still owing you? That's why today on Business Unpacked, we are going to unpack 7 financial numbers every business owner should know and understand. And I don't mean that you need to become an accountant. You don't need to be. But if you're the owner of the business, the person making decisions, you need to understand what your numbers are telling you. So you may ask me, why do these numbers matter? Before we get into the 7 numbers, let me make something very clear. Financial numbers are not just for your accountants. Your accountants may prepare your accounts. Your bookkeeper may record your transactions. Your finance team may produce reports, but you are the business owner. You're the person deciding whether to hire, whether to expand, whether to open another branch, whether to buy an equipment, whether you can afford to take money out of the business, whether you need to increase your prices, whether you can afford to give customer credit, and those decisions have financial consequences. So you need enough financial knowledge to ask the right questions and understand the answers. Think of your numbers as the dashboard of your business. When you're driving a car, you don't need to know how to build the engine, but you need to know how fast you're going. So you look at your speedometer, how much fuel you have in the car, whether there is warning lights on the dashboard, maybe the brakes are not working or something else is not working. Your business is the same. The numbers are giving you the signals. So the question is, are you paying attention as the business owner? So number 1 number that you need to understand as the business owner is revenue or sales. And I know this one most business people understand. So as a business person, you may say we made 1 million this month or 500 this month, whatever number that is. Let's work with 1 million for this case. So you might say we made 1 million this month, but here's where we need to be careful. Number 1, revenue is not profit. Yeah, revenue is not profit. Revenue tells you how much money your business generated from selling its products or services, but doesn't tell you how much you kept. Imagine you run a retail business and you sell 1 million worth of products. Sounds fantastic. But because those products cost you 700,000 to buy them or to make them, you now have only 300,000 before considering your other operating expenses. And I'll explain what other operating expenses include. They include salaries, they include rents, electricity bills, internet, communication, transport, marketing, software, name it, bank charges, taxes. All those are operating expenses for your business. So suddenly that 1 million does not look quite as impressive. So yes, track your sales, but don't stop there. Ask, is the revenue growing? Which products or services generate the most revenue? Is that revenue actually translating into profits and cash? That's where the real analysis begins. So let's work with the sales of 1 million. Your cost of sales is 700,000, and cost of sales is the amount that you have used to get those products. So for example, if you're manufacturing, your cost of sales is the raw materials, is the direct expenses, for example, labor. If you're getting something from a supplier, your cost of sales is the actual purchasing costs, plus maybe the delivery costs, plus maybe communication costs. You see, it's the amount that you pay to get a particular product. So your cost of sales is 700,000. So your gross profit is 300,000. Then there are other expenses. Okay, there is rent, there is salaries, there is electricity bills, communication bills, marketing, and all that. So 300,000 is just the gross profit. So we'll look at the next profits as we discuss these numbers. So we've gotten to the gross profit. This is the second number that you need to understand as a business person. And this is where we start getting into the real economics of your business. Gross profit essentially tells you what remains after you deduct the direct costs associated with producing or purchasing what you sold. Like I told you, they may include raw materials, they may include the actual purchasing costs. If you're not making that product, it may include delivery fees, storage fees, if at all there are any, insurance, if at all it's applicable to that product, and so on. So let's use an example. You sell a product for 1,000 Kenyan shillings. It costs you 600 to purchase or produce that product. Your gross profit is 400 in this case. That means your gross margin is 40%. So basically 400 over 1,000. Why does this matter? Because you could be selling a lot of products and still have very little left to cover your other expenses. So this 400 will cover the other expenses relating to your business. And that is why pricing matters. You need to understand these numbers so that you can price your products and services accordingly. So if your gross margin is too low, you may find yourself working incredibly hard just to generate enough money to cover your operating costs. So don't just ask, how much did we sell? Instead, ask, how much did we make from those sales after the direct cost of delivering the products? So that way you'll be able to calculate and know your gross margin. So in this case that we've calculated, your selling price is 1,000, your cost of sales is 600, so your gross profit is 400, meaning your gross margin is 40%. So that's why if, for example, you have a gross margin of 15%, it's not the same as having a gross margin of 40%, because out of that percentage, you're supposed to deduct other operating expenses. And you can immediately see why understanding your numbers matters. The number 3 number you need to understand is net profit. This is the number that tells you what remains after you've accounted for the expenses involved in the running of business. Remember our 1 million sales, we might have 300,000 in gross profits, but then we have operating expenses. There is rent, there is salaries, there is communication, transport, and all that. So let's say your total operating expenses come to 220,000. That leaves you with only 80,000 as net profit. So that's your profit before considering any other applicable items that may affect the final results. And remember, even after this net profit, there is tax that comes after the next calculating the net profit. And this is where you need to be very honest with yourself as the business owner. Are you actually running a profitable business? It's not about, am I busy, or are customers coming, or is money coming into the bank? No, it's about the numbers. It's about your margins. And I want you to go a step further. Don't look at profit as absolute numbers. Look at your profit margins. because 500,000 profit on 10 million revenue is very different from 500,000 in profit on 2 million revenue. Okay, so the latter is a healthier business than the previous one. So the latter is the 500,000 profit on 2 million revenue. The other number you need to understand is cash flow. So let's talk about cash flow. Here's a scenario. So you invoice your customer 1 million this month. Your accounts show 1 million in sales, of course, because you've recorded the 1 million in sales. But your customer has 60 days payment terms, meaning if they buy the goods today or the products today, they have up to 60 days to pay for those goods. So they haven't paid due yet, but you've made a sale. On your records, you've made a sale. Meanwhile, your employees need their salaries, your landlord needs rent, your suppliers need payments, your business needs electricity, transport, airtime, and other operating expenses. So you may have made sales. You also need to pay the taxes if your business pays taxes on a monthly basis. So you have made sales and you may have even recorded a profit, but you don't necessarily have the cash. And this is why you can have a profitable business that is struggling with cash flow. Cash flow answers a different question. What cash is actually coming into the business and what cash is going out? So as a business owner, you need to know, how much do I have in cash? How much is expected to come in? How much cash is expected to go out in terms of payments? When are all these payments due? And what payments are due? And will I have enough cash to meet all these obligations? Because cash flow problems can bring pressure to a business very quickly and a business owner. So profit keeps the business economically viable, but cash keeps the business moving. So profit is not equal to cash. The number 5 is accounts receivables. And what is accounts receivable? In simple terms, this is money that your customers owe your business. And if you sell on credit, you need to pay very close attention to this number. Let's say you've made sales of 2 million, but 800,000 of that is still remains unpaid by your customers. So on paper, you have sales of 2 million, but in reality, 800,000 hasn't reached your bank account. So ask yourself, how much do customers owe me? How old are those debts? Which customers consistently pay late? How much am I allowing customers to buy on credit? Because sales are only useful when you can eventually collect the money. This is why your business needs a proper receivables management process, because you need clear credit terms, you need invoices issued promptly, you need follow-up procedures, and you need to know when a customer has moved from a good customer to credit risk. The other number is accounts payable. So this is money that you owe. Money that you owe your suppliers, your landlord, even your employees, all your creditors. And again, don't just look at the total. Understand the details. Understand, who do you owe? How much do you owe? When is it due? Which payments are overdue? Are you relying too heavily on supplier credit? Because supplier credit can be great and useful, but if you don't manage it properly, you can create a cash flow crisis. Imagine you have 500,000 in the bank, but then you discover you have 700,000 in supplier payments that are due the following day or the following week. Suddenly your 500,000 cash balance doesn't look so comfortable, because you still need an extra 200,000 to meet that obligation. That's why your cash position must always be considered alongside your obligations. You need your cash position, I mean the amount of cash that you actually have, the amount of cash that you can easily access to meet your obligations. Number 7 is your tax obligations, and this is very key and very important. Now, I know tax is not always the most exciting topic for business owners, but tax will always be there. Tax laws are there. Unless they are all scrapped out, they are removed, tax will always be there. And the earlier you understand your tax obligations, the earlier you appreciate tax, the better it will be for you as a business person. So ignoring tax will not make it disappear. The laws are still there and they're still being made. New laws are still coming up. So depending on your business and circumstances, you may have obligations relating to things such as VAT, pay as you earn if you're running a payroll, withholding tax, income tax, and any other applicable taxes. And the important thing isn't simply knowing how much tax you paid last year. You need to understand the current position. What taxes apply for your business? What are your filing obligations? What are your payments deadlines? Are you keeping the appropriate records? Are you collecting and retaining the documentation needed? Are you setting aside money for tax obligations? And importantly, are you planning for your tax rather than waiting for the deadline to arrive? And let me say something that may surprise you. Even if you have an accountant or a tax expert handling your compliance, you as a business owner needs and should still understand the basics of your tax position. So your accountant is your advisor and gives you support, but ultimately you're the person running the business. You should be able to ask intelligent questions about your tax affairs and understand what is being done on your behalf. So, and I run a program for business owner to help them understand taxes, their tax obligations, tax management strategies for their businesses, and what you need to understand even if you have contracted someone to do your taxes and to file your returns. So if you're interested, please write on my email, which is on the description box, and I'll get in touch with you. And this program is very important for business owner because I'll help you understand your tax obligations, your deadlines, what you need to look out for, what email correspondences come from KRA, because if you leave all the tax issues to your accountant and you don't understand what you expect even from KRA, sometimes, and I have seen this with so many business owners, they have an accountant who tells them, I've filed the returns, but actually they have not filed the returns. At the end of it, you find the business owner is the one being stressed by KRA because they have penalties or they're being asked about their returns. So if you're a business owner and you need to understand taxes and tax processes, please reach me out on my email, which is on the description box, and we'll go through all your tax obligations for your business, what you expect from KRA, what you expect from your accountant if you have one, and everything around taxes. So let's bring the 7 numbers together. So number 1 was revenue. How much are you selling? Number 2 is gross profit and gross margin. How much are you making after direct costs? Number 3 is net profit. After running the business, what is actually left? Number 4 is cash flow. What is coming in and what is going out? Number 5 is accounts receivables. How much money are your customers owing you? Number 6 is accounts payable. How much money do you owe your suppliers or your creditors? Number 7 is tax position. What are your tax obligations and are you prepared for them? These numbers don't exist in isolation. The 7 numbers, they tell a story. Personally, as a business growth and financial consultant, I can tell the story of your business by just looking at your numbers, looking at your revenues, looking at your expenses, your gross profit, your net profit, your taxes, your receivables, and your payables. I can give you a whole story about your business by just looking at your numbers. So numbers give a story for your business. They should not be ignored, and as a business owner, it is your responsibility to ensure that you have these numbers at your fingertips. So your sales might be increasing, but your margins are not matching the same. Your profit might be positive, but your cash flow will be under pressure. Your bank balance might look healthy, but you could have significant supplier obligations coming due. So your business might look busy on the outside, but the numbers might be telling a totally different story. So this is a little challenge for you. I'm talking to business owner. Before you move on to your next task, take a piece of paper and write down the 7 numbers for your business. Don't estimate. So you see those numbers we've discussed. Write down, for example, for the day or the week or the month. So don't estimate, don't guess. Go and find the actual figures. So that's the revenue, the gross profit, the net profit, your cash flow, your receivables, your payables, and your tax position. And that's what Business Unpacked is all about. So we are going to have real conversations about what it actually takes to build, manage, and grow a business. We'll unpack business strategy. We'll talk about the money side. We'll have conversations with entrepreneurs to discuss what really happens behind their businesses, because I don't believe entrepreneurship should be about guessing your way through business. You should understand what you're building. So if this episode has helped you to look at your business differently, subscribe to the channel and share this episode with another business owner who needs to hear it. And if you need to go deeper into understanding your business finances, I have an SME clarity, financial clarity program that you can enroll. And I'll also be having an SME financial clarity webinar coming soon. So stick around to get the details. So until then, remember, don't just look at your business numbers, understand them. So I'm Charity Mwangi, and this is Business Unpacked, where we discuss business, money, and real business conversations. See you in our next one.